Hello everyone, welcome to Best of Us Investors. We as a tribe are gathering in the Discord server, where we share Carrie's portfolio, Carrie's buy and sells in real time, and we have live discussions every Mondays before the market opens and right after the market closes on Fridays in the Discord server. The stock analysis team also analyzes stocks based on the votes from the tribe members, so hope to see you all in the Discord where the link is listed in the description to join.
We would also appreciate if you can subscribe and hit the like button, which will help our stock analysis videos.
Now let's get started with our stock for this week. Today we'll be talking about Abcellera Biologics. The ticker symbol is ABCL. Abcellera aims to become the centralized operating system for next generation antibody discovery, where they utilize their artificial intelligence powered drug discovery platform to search and analyze the database of natural immune systems to find antibodies that can be developed as a potential drug. The process from a drug being discovered from a lab and getting FDA approval usually takes a very long time. So in some cases, it can take more than 10 years. Also, it costs billions of dollars to get a single drug in the market. One stage where it takes a lot of time and costs money is the discovering of the drug, since this is done by scientists and usually they go through hundreds of experiments to find a candidate molecule to start with, which may not even work out after years of experiments in clinical trials. However, with Abcellera's AI-powered drug discovery platform, drug candidates can be discovered much faster and cheaper. Once Abcellera discovers a potential antibody or a drug, their partner pharmaceutical companies would take that drug into phase 1, 2, 3 trials for FDA approval, paying Abcellera a fee. One of the major reasons why some investors stay away from biotech pharmaceutical companies is because the stock price can plummet huge based on the failure of a clinical trial. And this cannot be anticipated by technical analysis, since that doesn't predict the result of a trial. In some cases, that stock price can plummet 50% or more on a single news. Abcellera, they are not involved with clinical trials, but they just discover the antibody or the potential drug and hand it over to its partners, receiving a fee, which in my opinion makes Abcellera less riskier regarding the stock price. The way that Abcellera makes money, I think, is really smart, and it's an amazing model. First of all, they receive a fee as they discover the antibody or the potential drug for their partners. However, they also receive royalties as the drug gets FDA approved and starts selling in the market, meaning an amazing stream of revenue for Abcellera in the upcoming years. As of March 31st, 2021, Abcellera had 29 partners whom they are conducting drug discovery activities, including big pharma companies such as Eli Lilly, Novartis, Pfizer, GSK, and etc. They also have 119 discovery programs that are either completed, in progress, or under contract. Just to make this clear, it may take some time since the antibody or drug needs to go through clinical trials and get the FDA approval. But once the antibody that Abcellera has discovered starts getting FDA approvals and starts selling the market, I see Abcellera as a cash compounding machine. So for one example, Abcellera has discovered bamlanivimab, an antibody to treat confirmed COVID-19 patients, which actually reduced the hospitalization by approximately 70%, targeting the virus spike protein, S protein, that neutralizes the virus before it enters the host. Bamlanivimab was developed from an antibody that was discovered from the blood of a recovered COVID-19 patient. Within 1 week of receiving the sample, Abcellera screened over 5 million antibody-producing cells to identify and isolate approximately 500 unique antibodies that bind to COVID-19. The binding antibodies were then tested to find those most effective in neutralizing the virus, which was bamlanivimab. They also discovered a new antibody neutralizing the COVID-19 variant that's actually recently entered the clinical trials. Now, both Bill Gates and Peter Thiel are investors of this company. And if you quickly look at their financials, their total revenue was 4.6 million in 2020 Q1, whereas in Q1 2021, it increased to 202 million, which was approximately 50x. Out of that 202 million, 171 million came from the royalty from that one drug getting FDA approved. Now, if you think about it, they have 119 discovery programs in process at this point and 29 partners. If one drug getting FDA approval brought in that much revenue, you can imagine how much they would bring in, even if only 10% of these drugs that they're working on succeeded to get FDA approval. And again, they receive royalties. So as long as the drug is FDA approval and being sold to the market from any of their partner companies, Abcellera makes money. I also think they will expand their partners and will keep working on more drug discoveries, increasing the potential to have more drugs in the market in the future. Current stock price is approximately $15 to $16, which came down from its high when it IPO'd at around $70. Their lockup period has expired on June. There have been some insider sellings, which makes sense, and that usually happens. And again, I just want to reiterate that since it does take some time for a drug to be FDA approval, I do think it may take some time before we see some really nice price actions from Abcellera. But once the antibodies start getting FDA approval, it will start bringing in a ton of revenue to the company, in my opinion. And that is why I'm investing now at its all-time low, below $16 to $70, and am happily dollar cost averaging down. For me, this is a very long-term investment, and I will not be surprised if the stock price goes even more down from this point in the short term, or maybe a couple of years, if not more. But whenever there is a dip, I'm happily adding more and have no thoughts on selling a single share.
I looked at other antibody therapeutics companies to find good comparisons to Abcellera. So I found Amgen, Bristol Myers Squibb, CureVac, Emergent Biosolutions, and Arcus Biosciences. Looking at how Abcellera compares ratio-wise to these companies, you can see that their stance is pretty average. On some things like their PS ratio, they're a bit higher than some other competitors, but not too high like others. Their price-to-book ratio looks pretty good, and they have a positive PE ratio, that they are profitable, which is always good news. The only thing is, though, ABCL does spend pretty little on their R&D. If you look at their price-to-research ratio, you can see how little they spend on research and development, considering their market cap, of course. I find this to be pretty weird, considering how they are all about revolutionizing their field. But hey, maybe it's just not needed for them to have such a high expenditure on R&D. But still, 113 is pretty high for an PRR ratio. Abcellera is a relatively new company, right? Comparing them to these competitors who've been in the game for much longer usually, and vary pretty broadly in market cap, Abcellera has the lowest operating ratio of them all, at 0.24, even though some of their competitors have been around since the 80s. This low operating ratio is great, because what an operating ratio essentially signifies is the amount of money that you have to spend for your revenue. So say that you have a company with an operating ratio of 0.5, that would signify that for every $100 the company makes in revenue, $50 have to be spent to make that possible. An operating ratio over 1 is bad news, because that means that essentially you spend more money on your products and services than you sell them for. If you look at Abcellera's competitors and what the usual operating ratio is in this field, you see that 1, it's quite a lot, and 2, Abcellera spends only about 38% or less of that what an older, more established company in this field has to spend for their revenue. Abcellera has a whole different business model to what's considered the norm in this industry. And I think that looking at their operating ratio, you can see that this new business model of theirs seems to kind of work out great for now. But still, their recent revenue spike has been due to their new COVID royalties. There's no way to tell if they will always maintain this operating ratio. But if the royalties just keep on stacking on top of each other and they don't have like an expiration date, that would signify exponential growth in revenue. So again, this company was only founded 9 years ago, and they spent more than 2.5 times less on operating costs than competitors who've been around since the 1980s and 90s. And may that be because of an emergency authorization or not, it's still pretty impressive. And still, these competitors themselves still spend less than some of the other companies in this field. So really, even though circumstances might vary, Abcellera's 0.2 current operating ratio is great news, especially if in the future these royalties will just stack on top of each other. So looking at these stats, or especially the stat about the operating costs, this company overall looks very promising.
They partnered with Lilly to select from more than 500 unique antibodies from patients that recovered from COVID-19 to create antibodies for the treatment and prevention of COVID-19. They also have a partnership with Pfizer, and in the partnership, Abcellera will be applying their proprietary monoclonal antibody screening platform to attempt to discover function modulating antibodies against undisclosed membrane protein targets. So they're essentially just using their platform for discovering antibodies to help Pfizer discover antibodies against undisclosed membrane protein targets. And Abcellera is also receiving a upfront payment and research support to fund their operations on that. Pretty sure they're also working with DARPA, and DARPA is a government agency that develops and researches new technologies. Like previously, they created the GPS, and they probably have something that we don't even know right now. But Abcellera partnered with them on their pandemic prevention platform, which is how they developed their own rapid pandemic defense platform with DARPA. And they created antibodies within around 60 days, as per the agreement with DARPA on that. They also have a partnership with Gilead. And as per the partnership, Gilead will get access to Abcellera's humanoid mouse technology. And Abcellera will also generate panels of antibodies of up to 8 targets. And Abcellera is also working with Angios to develop therapeutics to combat blindness caused by diabetes. And with this partnership, Angios can focus more on treating blindness and diabetes through unique scientific insights rather than focusing on developing the internal antibodies, which Abcellera will be doing as per the partnership. I like their business model, how they're just like, they don't have to go through the clinical trials or anything, and they can get their revenue from these fees with their partnerships. And going on to the risks or cons of Abcellera, one thing is that significant number of their revenue comes from a few partners, and the loss of one partner could significantly impact the business. So for example, they had like 47% and 15% of their revenue come from 2 partners alone, and the other partners contributed to the rest of the revenue. So with these like big numbers of just 2 partners, the loss of one partner could impact the business. And their sales and marketing is currently limited, which can impact the business because sales and marketing is basically just as important as developing the product. So they probably need to work on that more. And the PS ratio is relatively high, around 9.69, and it's probably not something that people would be looking for in a strong value play, but it is a growth company.
Okay, so let's look at Abcellera today. And this is a fairly new publicly traded company. They had their IPO in December of 2020, 27.7 million shares at $20 a share, raised about $122.8 million. The revenue for 2021 from the Q1 2021 is 202.7 million. 2021 estimates, according to Seeking Alpha, the revenue is expected at 345.6 million and an earnings per share of about 60 cents. However, in 2022 and 2023, Seeking Alpha shows revenue is going down 121.8 million in 2022, 106.8 million in 2023. And this would be due to the fact that the royalties from Eli Lilly and the one product that they have would be decreasing while they're waiting for other partners and products to jump up in their product list. No dividend yield. It's still a young company. Outstanding shares, 320 million shares. Institutions own about just under 20%. Short interest is 5.5%. Net income margin, 55%. Return on equity, negative 55%. Return on equity, negative 49% a point. As of June, several of their insiders, executives, CEOs, sold about 11.9 million shares to institutional investors. You can see in 2018 and 2019, the revenues were just from research fees, 8 million in 2018, 11 million in 2019, and almost 20 million in 2020, which is good. But they didn't have any milestone payments or royalty revenues. You can see in 2020, they received about $198 million, and that was from Eli Lilly, or the one product that Drew was talking about earlier. So with that, you can see the total revenues have jumped from 8.8 million to 233.1 million in 2020. And if you didn't have the royalty, and I'm just saying for comparison purposes, if COVID-19 hadn't happened and they didn't get this product through the emergency approval process, that revenue would be approximately 35 million instead of 233 million. So just be aware of the numbers. However, the good side is if you go down, you can see the income or loss from operations, that there was loss from operations for the previous 2 years. And with that royalty from Lilly, you can see a gain of $156 million from operations, which comes down to your net earnings of $118.9 million, which is about 45 cents per share diluted. The other thing I look at is if you go down, you can see the number of shares have increased from 171 million to 263 million. So again, it's diluting your shares as a shareholder. And then you can go down, you can see research and development, sales and marketing. You can see that the cost of those are going up for stock-based compensation, how they break it out. So stock-based compensation was 615 in 2018, and now you can see it's 8.3 million in 2020, which is normal for these kind of companies, but just be aware of it. So when we look, you can see that in the 3 months ending in 2020 of March 31st, that they had no licensing revenue, they had no milestone payments, no royalty revenue. And in the quarter just passed of 2021, you can see that they did have that. So you can see $171 million in royalty payments. So you can see the total revenue increased by 198.1 million from the 3 months ended March 31st, 2020 to March 31st, 2021. ABCL received a milestone payment on the first commercial sale in Europe by Lilly relating to molecular treatment for COVID-19 in the amount of $7 million. Royalty payments of 171.5 million are directly associated with the specified percentage of proceeds that Lilly received from the sale of this particular drug. So they earned 20.3 million in licensing revenue related to the recently acquired triannual humanized rodent platform business. Despite a significant increase in the cumulative programs under contract compared to the same period in the previous year, revenues associated to research fees decreased by $0.7 million for the 3 months ending March 31st, 2021. The decrease was driven by a reduction in revenue from their DARPA COVID-19 antibody discovery program. This is all from their 10Q. So if you look then towards royalty fees, you can see there's 20 million of royalty fees, and those royalty fees were directly attributable to the royalty revenues received by the company from the sale from Lilly. Then you go down to research and development. We've talked about research and development expenses increased by 8.2 million or 200% from the 3 months ended in March 2020 compared to March 2021. 5.9 million of the increase is due to the increase in compensation expenses consistent with the increased headcount. Okay, so they're starting to hire more people. So I expect that this expense will go up as this company matures. So when you go down, you can see the income from ops is $158 million, and then the net earnings is 117.2 million, and a majority of that is again from royalties from Lilly. And for the quarter, you can see that the diluted shares went from 151 million to 320 million, and that just came basically out of the IPO. So to date, the company has financed operations primarily from revenue from drug discovery partnerships in the form of research fees, grants from government funding, external borrowings, the issuance and sale of convertible preferred shares and notes, and common shares. The IPO was completed again in December, where they received $522 million. So you can see the cash, they have $685.7 million in cash. Their total assets have gone up 907 million. Total current assets is 907 million, and I like to look at the total current liabilities that are at 88 million. So that's a good sign. They have money to cover their short-term liabilities. If you go down, you can look at their total liabilities have come down just a little bit from 175 million to 171 million dollars. So right now, the balance sheet with cash on hand looks pretty solid, but I expect that with the reduction of royalty payments from Lilly at some point, and without any income coming in to replace that, if they don't have it, that you're going to see a little bit of a cash burn taking that down, along with the expansion of hiring more people and doing more of these studies. So you can see the net cash provided by operating activities in a year ago was negative, and now we have $109 million from operating activities, which is a really good sign. The increase resulted primarily from the increase in revenue from the royalty and licensing streams, satisfaction of clinical milestones under their partnerships with Lilly, and continued discovery research activities, as well as securing new multi-year, multi-target contracts with partners. The there's three areas of cash flow. The second is net cash used in investing activities, and you can see net cash used by investing activities increased from 5.6 million to 15.8 million in the 3 months ending March 31st, 2021. Investing activities during these 3 months are attributed to the investments in real estate, facilities, and equipment in their Vancouver offices. Third area is net cash provided by financing activities, and net cash provided by financing activities was $87.7 million for the 3 months months ending March 31st, 2020. This was due to their proceeds from their Series A2 financing. Net cash used by financing activities was $1.5 million ending March 31st, 2021, and that was due to repayment of a long-term debt. When you go down cash and cash equivalents, went from 88 million to 685 million of cash and cash equivalents. So for a company just starting out, they have cash. They do have a pretty good revenue stream with this revenue from Lilly at this point with royalties. The question will be, can they secure additional programs under contract and move these clinical tests into the different phases and start generating more royalty income? If they can do that, that's going to be a good sign for shareholders. At this point, I'm looking at, a share price of $15.79 at the time of this filming. And if you look at the technicals and you're a technical trader, there are no 200-day moving averages because it hasn't been trading that long. But the 50-day SMA is about $23.64. So it's quite a bit below the 50-day SMA. And then the RSI is about at 26, 27. So I think you have room, dollar cost, if you want to get into this, you have plenty of time to get into this at the time. And I wouldn't hurry to get into it at this point. But as Drew said, if you're going to get into a dollar cost average down and submit a position that way, it could be a couple of years before they start showing, consistent revenue. So your money could be tied up for a couple of years. So just be careful.